We got a lot to unpack on this episode. We got a new Fed chair, an Iran war that's hopefully over, interest rates that are stubbornly high, and some markets doing better than others. On this month's episode, I'm going to break it all down for you guys. Here we go. All right, guys, I start every episode like this. I want to break down where we stand today. In the last 30 days, we've seen 1,836 new listings come on the market. Great news is we had a little over 1,700 homes actually close. Now, those are sales that went under contract last month, closed this month. That's a good sign. Now, we only had 1,388 properties actually go pending. So that means we had more inventory come on the market than homes that went off the market or went into escrow, I should say. Because on top of that, we had about 500 homes actually get pulled from the market and expire. So that shows us that inventory levels with 1,700 going on the market and about 1,700 coming off the market, we're seeing about a leveling effect, and that's what we're going to see on these next charts. So if we look at the county as a whole, we're seeing actually the median sales price come up just a little bit year over year, about 1.3%. That's a positive sign. We always want to see some appreciation in our market. Probably the bigger factor here is that we're seeing less inventory, about 12.4%. That usually is the first indicator that we're going to see prices go up. But how could that be when we're seeing all this conflict in the world right now, a lot of consumer confidence gone right now in our market and our economy? How can that be that we're seeing these healthy signs? Well, really, it's a tale of two tapes. We have a demographic that is heavily buying right now, and that's our wealthier demographic, and an entry-level demographic that is struggling a little bit more to buy. And I'm going to break those down for you here. If we look at some areas throughout San Diego County, not all, but our wealthier areas, our more expensive areas, I should say, those are typically our coastal neighborhoods. If you look from San Diego City, we're seeing a 3% decrease in values to areas like Del Mar, Encinitas, Coastal Oceanside, Carmel Valley, where we're seeing big, significant gains in appreciation year over year. That is a clear indication that we have a wealthier demographic that's still buying coastal homes, right? Still upgrading or downsizing into properties in these premium areas. Now, if we flip the script and we look into our more affordable areas, such as Escondido, Chula Vista, San Marcos, and Vista, that's a different story. Now, we're not seeing any significant decrease pretty much across the county, but we are seeing some of these areas really stay stagnant and maybe see a little bit of depreciation. And that is mainly from interest rates. Interest rates, and I would say consumer confidence. But with interest rates at 6.5%, if you are a first-time buyer or an entry-level buyer, and let's say you're putting down 5% or 10%, that payment on that $500,000 to $800,000 loan is going to be pretty significantly high. And that's where things are out of whack. When you can go rent for a more affordable amount than you can buy for, then we know affordability has been out of control, and that is driven by interest rates. So guys, what needs to change? Well, first and foremost, we need the Fed to start decreasing rates, and they're not going to do that while we're in this inflation type of environment. So even with our new chairman, Kevin Warsh, in play, he came out and said that they're going to hold rates steady. So we can't rely on them to lower rates in the foreseeable future. Hopefully, I predict that we will see them do a rate cut or two before the year is over, but primarily what we need to look at is the short term. How are rates going to come down in the short term? Well, first and foremost, 2 months ago, we had the same Federal Reserve rate and rates were floating just below 6%. When that happened, the market was chugging along. We had more entry-level buyers in the market. Sure enough, with everything going on with this Iran war, we saw inflation start to creep up, and that meant interest rates are going to creep up. So now, finally, hopefully, fingers crossed, we're getting out of this Iran situation. that should hopefully get some consumer confidence back in our market. Our bond market should improve. And that is when we could see interest rates possibly come back down into that 6% range. And it's not all doom and gloom for my entry-level buyers out there. Actually, I think now is a perfect opportunity, right? When buyers are sitting on the sidelines thinking they can't afford, the creative ones are going out there and finding opportunity in deals. And what I mean by that is we need to have all of our buyers look at options such as like 2-1 buy down, where we buy down the interest rate 2 full percent, currently at 6.5%. You could get into a property at 4.5% interest rate for the first year, 5.5% for the second year. And we're even seeing some builders out there offer wild incentives where it's a 3-2-1 buy down, where it's 3% less the first year, 2% less the second year, 1% the third year, and then you get locked into your ongoing rate. So definitely opportunity out there for the creative buyers to negotiate with the seller, get the seller to buy down your interest rate. Come a few years from now, you'll just be refinancing anyways. All of us will that have bought over these last couple of years. So get creative out there. It is not all doom and gloom. And lastly, here's my seller advice for this month of June. Be patient, right? We are in a market that the economy and consumer confidence is heavily making an impact on. So there's just fewer buyers out there, but that doesn't mean your property won't sell. We just need to make sure it's priced right, it shows well, and that you're competing and you kind of look like that next to sell home that'll go or that will sell in your neighborhood. And as long as we're doing those things, eventually a buyer's gonna come along. Eventually the market's gonna get a little, fire lit under it and improve, and your home will sell. That's all I got for you guys on this month. If you have any questions, please reach out to myself or somebody here on the True Local team. Take care.